Welcome to RANsquawk CE morning briefing for Wednesday the 19th of August 2009. Just come out to 8:30 now in London, so all the markets now in Europe and the UK open. A quick check of what's come out and how we stand at the moment. In particular, one of the major market movers has been a fall, quite a sharp fall in the last 2 hours of trade in the Chinese Shanghai Composite Index, which did finish the session down 4.3%, which did fall though as much as 5% towards the close. Since August 4th now, the Shanghai Composite has fallen some 20%. So again, that's only in the course of 10-15 days or so, which does technically officially signal a bear market now turn for the Chinese main share index. That in turn, with the sell-off, has seen global index futures in both the US and Europe push lower and has resulted in a lower cash equity open in Europe. The FTSE CAC and DAX down around 1% at the moment, and in that risk-averse trade, healthcare is the best performing stocks, with basic materials and financials the underperformers. That theme as well pretty much carried across the board. The dollar index has risen in risk averse trade as well as strengthening to the Japanese yen. Dollar index up around 0.4% at the moment, which has pressured WTI crude futures and spot gold prices back down. And in turn, euro dollar and cable are trading sharply lower, as too is the Aussie dollar this morning. Taking a look then in terms of news flow to come out overnight, a couple of things worth noting. Firstly, out of Europe, a story in the Telegraph, nothing particularly new but just getting more coverage and more market attention as Germany braces for a second wave of credit crunch was their headline. German Economics Ministry is drawing up a raft of special measures with the Bundesbank to head off a fresh financial crisis, fearing that the loan squeeze by struggling banks will set off a serious credit crunch early next year. And then elsewhere, worth noting as well, some comments related to the US dollar. PIMCO's Newborn says that the dollar to decline on concerns over reserve roll. That as well, on a similar note, coming out of State Street, the US bank analysts, they say that sovereign wealth funds may decide to purchase instruments denominated in special drawing rights to diversify and create more efficient portfolios and promote its alternative to the US dollar. Elsewhere in the UK, another interesting story of note is coming out of the Conservative leader David Cameron. He's been covered in the Telegraph and the Guardian this morning, saying that Gordon Brown is running the risk that the British government will be unable to pay back the money it's borrowing from international investors, and that the British government could default on its debts. But some analysts considering that as more as scaremongering in regards to him being the opposition leader. Taking a look then in terms of the calendar, at 9 o'clock we'll look out for the Eurozone current account. Focus in UK markets will be to the Bank of England minutes. That'll be for the August rate setting meeting. We'll also see the agent's summary of business conditions from the Bank of England. Obviously, having already seen the quarterly inflation report last week, not many people expecting too much from these minutes. However, it remains to be seen whether it was indeed a 9-0 vote in terms of extending that QE programme by the extra 50 billion to the current ceiling of 175 billion. Anything less than a 9-0 vote, if there was any dissent within the board, we could possibly see some question marks as to will this then be the end of the QE programme. Other than that, we'll see the construction output report from the Eurozone at 10 o'clock, UK CBI Trends Order Survey at 11. We'll see the NBA mortgage apps at midday alongside Canadian CPI numbers. No major 130s today. We'll just see Canadian leading indicators. We'll have the oil inventory numbers from the Department of Energy as usual at 3:30 London time. Elsewhere, we'll have reverse auctions. The Bank of England, they're targeting the shorter end today, the 2013-2019 durations, and then we'll see a Fed outright Treasury coupon purchase of 2020 to 2026 durations. Usual time there, results at 4 o'clock London time, so 10 o'clock in Chicago.